Welcome to Midas Letter RAW! Hey everybody. The reason I did such a crazy intro, Special Ed over here, say hello.
Hello everyone.
Is because we already have our leader, our fearless leader, James, on the horn. James, what are you doing? Where are you? We need 1 second.
In honorable Vancouver.
Vancouver.
Honorable Vancouver. I am just now. I've got some.
How's
some
the mining
footage
show?
here that
There
I'd
he
like
is.
to
There he
share
is.
with you guys. Hey, I've got some footage here I'd like to share with you guys. I spent some time at the Vancouver Resource Investment Conference here yesterday, put on by Cambridge House at the Vancouver Convention Center. And I'm happy to report that though I arrived late in the day at the end of the conference,
Hey,
We just missed the important part.
you arrived at the conference. There you are.
Okay.
Look, it looked like you.
So just skip all the first stuff and get to the meat of it.
oh, so that didn't work, really? Hold on. All right.
No, we got you now.
We're doing a pre-record, right? Okay, so I'm going to try that again.
No pre-record.
Wait,
This is live.
No, James, the time difference has.
This is live.
We are 3:03, buddy. So
Live.
You're
Oh,
all good.
this is
You're all
live.
good. We just didn't catch the grand finale. You were building up to a point.
Hi, everybody. What I was saying was I was at the Vancouver Resource Conference, and it was remarkably well attended. So in years past, where you could have shot a cannon through the place and not hit anybody, this year it's quite lively.
So what was getting everybody's attention?
You know, James, if I didn't know any better, you look like
precious
a
metals.
statue right now.
Yeah.
Yeah, I can see that the signal's not the best today. Yesterday it was great. Today it's not so great.
Right.
So maybe just quickly, what stood out to you?
Well, actually, I spent the time talking to John Lazzarino from Quote Media about our streams and everything. So I actually didn't get to spend any time with any of the companies exhibiting there. I did run into Kelly Hislop, who from Midway Gold days, which is where the first mining company I ever worked for. And so it was a big mix. You know, there was lots of lithium, of course, lots of cobalt, lots of some vanadium projects. There was the usual suspects in the copper, silver mining, industrial metals complex. There were, of course, some uranium,
Uranium,
mix,
I
but
believe
the the heartwarming thing was that there were lots of investors floating around.
That's good.
Yeah, that bodes well. And now, as soon as I hang up from this, I'm going to Canaccord's Investor Day conference at the Waterfront Hotel, where I am going to talk to a lot of companies like Patriot One. I met with Patriot One yesterday with the Bullet ID management. I am meeting with the DNA genetics guys at the conference.
Cool.
Aurora is going to be presenting at the conference. I might actually run into Terry Booth if I can. So I'm going to spend an hour at the Investor Day at Canaccord, and then I'm heading to the airport to come home and be live from Toronto tomorrow in freezing cold -30 weather.
Are you taking the red eye, James?
No, no, I'm not.
Okay. See the volume on Royal Nickel today was like 30 million shares.
Yeah, and what's the price?
68 cents, but it shot up yesterday on a major intercept. I guess that news came out yesterday. Is that right?
Well, they had some drill results, and then apparently the conference that I think that you're at, the CEO took off. I think he canceled his talk and had to get back to Australia, and so now there's on the dirty forums there's rumors circulating.
Africa is in South Africa.
Oh no, sorry, Australia. Australia.
That's almost an accent you can take.
yeah, mate.
Are you telling me that there are mines in Australia, out in the outback,
Crikey.
Dan to the beach.
Crikey.
We could have some drinks on the Bobby if we go down there. We could have some real fun with them, eh? We'll drink some
Fosters.
And we'll talk to some Sheilas. And then we'll roast up some kangaroos and shrimps on the Bobby.
That's incredible.
Multi-talented. Multilinguistic, too.
There's a word to describe that?
Multilingual.
Polyglot. Polyglot.
Polyglot? Wait.
When they can speak many languages.
Yeah.
I guess all yours are in English. Though he can speak Spanish.
James can, yeah.
What about Pig Latin? Can he speak Pig Latin?
I don't know, James. Can you speak Pig Latin?
Jesus.
Wicked.
What a guy. What a guy.
Put that in your pipe and smoke it.
What's the weather like there?
Interested. It's pouring rain and gray, but warm.
Yeah.
Yeah.
The forecast for the airport in Toronto this evening, when I'm supposed to land, is for freezing rain and -15 with howling winds.
Oh, well, yesterday was -20.
The warm front's going to be here, I think, by tomorrow morning, isn't it?
Yeah. It'll be like a sunny day in June.
I hope it can hurry up because I don't want to land in freezing rain.
Well, let's make it happen, Ed.
Make it so.
Yeah. Engaged.
Engaged.
Okay.
Earl.
Captain, you got problems with the drive.
We have a really big show, as James likes to say. Do you know what's going on here, James? We got some major guests coming on.
Like who?
Well, we have Fire and Flower, which is a retail cannabis thing that's going public in a couple of weeks. We have Landon Roedding coming up, who's the CFO in EEVVF Co. We have, we're going to talk about what a bought deal is, and the news with Ricky.
Oh, fantastic.
Yes, Benjamin A. Smith also paid us a visit, as did Charles Taerk is going to be here at 4:10, and we always love having Charles in here. So with that...
Yeah. What about
Chucky Taerk?
Trevor Fencott also, Flower and Fire.
I mentioned that already, but James, it's been a slice. We look forward to having you back in the captain's chair tomorrow, and we're gonna do the news with Ricky Gerwitz.
Good work, gents.
Thanks, Fraser, and here are the headlines moving markets today. HEXO Corp has announced it will be filing a preliminary prospectus supplement to its amended and restated short-form prospectus dated December 14th, 2018. This relates to a proposed marketed public offering of common shares of the company for gross proceeds of approximately $50 million Canadian. The offering will be priced in the context of the market, with the price and total size of the offering to be determined at the time of entering into an underwriting agreement for it. The company will use the net proceeds from the offering for funding the company's global growth initiatives and research and development to further advance the company's innovation strategies. Agriflora Organics International Inc. announced that its wholly owned subsidiary, AAA Heidelberg Inc., is preparing to acquire a high-quality strain of cannabis to begin cultivation at its 8,800 square foot facility in London, Ontario. CanTrust Holdings Inc. has the necessary permits from the town of Pelham to proceed with its Phase 3 expansion. The revised Phase 3 expansion will have a footprint of up to 390,000 square feet, compared to the 600,000 square feet in the company's initial application. Tilray Inc. entered into a definitive agreement through a wholly owned subsidiary in which it will acquire all of the issued and outstanding securities of Natura Naturals Holdings Inc., the parent company of a licensed cultivator of cannabis. As a result of the acquisition, Tilray will obtain Natura's 662,000 square foot greenhouse cultivation facility, of which 155,000 square feet are currently licensed, as well as all subsequent cannabis output from this facility. Natura, through a wholly owned subsidiary located in Leamington, Ontario, is a licensed cultivator under the Cannabis Act specializing in the greenhouse cultivation of cannabis. Canopy Rivers Inc. announced that it has completed an equity investment in Herbert, a brand platform that focuses on the adult use beverage and edibles market. Canopy Rivers subscribed for 1.5 million Canadian dollars of preferred shares in Herbert. It has received incremental warrants entitling the company to increase its economic interest in Herbert under certain circumstances, as well as other governance-related rights. Valens GrowWorks Corp. Has entered into a multi-year extraction services agreement with privately held Sundial Growers Inc. for cannabis extraction services. Sundial, an Alberta-based licensed cannabis producer, will ship bulk quantities of dried cannabis to Valens over an initial 3-year term. Valens will receive and process the cannabis on a fee-for-service basis into cannabis oil derivative products for Sundial. Fire & Flower Inc. has recorded $10 million in sales since opening on October 17, 2018. The company opened with 5 shops on legalization day and has grown the retail network to 9 shops across the provinces of Alberta and Saskatchewan. And the CEO of Fire & Flower, Trevor Fencott, will be on the show later to discuss these milestones. Blockchain Foundry Inc. announced a strategic partnership with BitBuy, an online trading platform that enables users to buy and sell digital currencies. The two firms intend to cooperate on several initiatives covering various aspects of the digital asset industry. DionyMed Brands Inc. announced it has signed a binding term sheet to acquire Pioneer Valley Extracts LLC, a manufacturer and emerging cannabis brand in Massachusetts. Currently, DionyMed owns and sells concentrates and vape cartridges throughout California, Nevada, and Oregon. The acquisition of Pioneer Valley Extracts expands the company's national footprint in Massachusetts, the first recreational cannabis market on the East Coast. Flower One Holdings Inc. announced a new license agreement and brand partnership for cannabis product fulfillment in Nevada with California-based Old Pal. Flower One is now licensed to produce, manufacture, and distribute the entire Old Pal product line to Nevada's 130 cannabis retailers, marking Old Pal's first out-of-state expansion and entry into the Nevada market. Suniva Inc. announced a $10 million Canadian non-brokered offering of convertible debentures to provide additional working capital in response to higher than anticipated near-term demand for Suniva-branded cannabis products, which includes an additional $5 million in retail dispensary purchase orders. Including the initial $2.4 million cannabis purchase contracts, which were announced on January 4, 2019, Suniva now has secured a total of $7.6 million of near-term future sale contracts for Suniva-branded cannabis products in California. Sales commenced in January 2019, and these initial contracts are to be completed in the first 4 months of 2019. Weekend Unlimited Inc., through one of its subsidiaries, Weekend Unlimited Washington LLC, has signed an arm's-length letter of intent to provide processing and distribution facilities to Boggy Boone-branded cannabis company Seven Hills, with an option to acquire Seven Hills. Under the agreement terms, Weekend will provide a loan of up to $750,000 to Seven Hills in 3 equal tranches over 9 months to upgrade its facilities. It will have the option to acquire 100% of Seven Hills for $1.5 million. And that's your news for today.
Joined now by Landon Roedding, who's the new CFO of EEVVF. Landon, how's it going?
Excellent, thank you.
Great. So let's jump into the company. You joined the team in October, was it?
Yeah, that's right.
Yeah, so maybe can you just tell us a little bit about your background and why it was a good fit for you to join EEVVF?
Certainly, yeah. So my background is I'm a CPA, and I spent about 8 years at PricewaterhouseCoopers in their mining practice. And from there I moved on to work at Sheridan International in their financial reporting group for a couple of years. And then from there I moved on to Kinross Gold, Director of Financial Reporting, dealing mainly with external reporting, MD&A financial statement disclosures, all focused on IFRS. And then from there I moved into a private company called Blue Goose Capital, makers of organic beef, chicken, and trout, which is really good from a biological asset standpoint, and sort of transitioned nicely into my role here at EEVVF.
Cool. So in December, EEVVF got the license. So maybe walk us through that timeline and what you're able to do in what time frame in terms of from getting a license to actually reaping the rewards.
Yeah, certainly. So I think in July of last year we had our second flower room ready to go, and the Health Canada approvals came through in early December of last year, which would allow us then to put plants into those rooms, which will take typically 8 to 12 weeks depending on the year. This time of year there's less daylight, so it takes a bit longer. So we're hoping that the plants we were putting there in December will be able to start harvesting those in early March, mid-March, and then into the end of March we should be hitting full stride on that second flower room, which would really allow us to realize our full capacity at the current 220,000 square feet that we have.
220, that's a lot. Yeah. Okay. So in terms of just broad stroke financials, what can investors look forward to in 2019?
Yeah, I think 2019 is going to be a fantastic year for EvenCo. We're really going to be hitting our full stride at end of March, like I said. So sort of the last 3 quarters, we're going to see, I think, a big uptick in the sales numbers. We're going to see some positive EBITDA numbers coming out of there in the second, third, and fourth quarters. We're really hopeful that we'll be able to realize on our sales mix strategy as well. Right now, we're looking to be launching products into Newfoundland, the rec market, sometime in mid to late February. We're working through some of the purchase order details right now to finalize that. We're already shipping clones into Newfoundland, one of the first companies to be shipping the clones. That's been received pretty good considering the time of year that we're in. We're hopeful that in the spring that'll pick up, and we're also hopeful that other jurisdictions will pick up on that as well and allow us to work with them on the clone shipping. In terms of other financial highlights for the year, I think in the last interview Melinda had mentioned we are looking to do some financing right now. We're currently building out 780,000 square foot expansion project, which started in June of last year. The project's been working very well so far. Things are on track. Most of the materials are arrived and on site right now. The workers are there daily, although I'm not sure the last few days if they've been on site necessarily. But we definitely have active workers there. We're working on building out the boiler room, the irrigation system right now. And so part of the financing we're working through various options is to come up with the funds we're going to need to finish that and move that project forward and keep it on track for completion the summer of this year.
Okay, so is that, I'm just guessing that's a build out of your existing Strathroy operation, or?
Exactly, yeah. So it's going to augment the existing facilities. We're going to leverage some of the administrative space, processing, packaging, drying rooms, and then we're going to be building a new facility out and around the existing structure. It'll all be integrated and fully functional, and it'll be very exciting. We're very much looking forward to how that's going to continue to let the company build and grow and leverage the brand.
Cool. Just looking at your latest press release on January 3rd, there's a board appointment of Ms. Sherry Mogg-Edwards. Just talk a little bit about how that's going to help the company moving forward.
Certainly, yeah. Sherry was an excellent addition to the board of EvenCo, being a female-focused brand, and her being a leader at the LCBO, having CPG experience. It ties in very nicely with the strategy of EvenCo to launch CPG products this fall when it legalizes in Canada. The hope is we're going to be able to continue to build our existing brand and allow Sherry to leverage her network, her expertise to help us focus on the right areas, build the strong partnerships that we are hoping to develop, and really accelerate the process for us in terms of entering the CPG space.
Just curious from your perspective, the launch of REC, and what has surprised you, if anything, and how do you see things changing moving forward, and are you happy with the current situation?
I mean, I think the rec market in Canada has developed a little more slowly than people would like to have seen in general. The supply shortages certainly haven't been a big help to allowing access to the product lines for the most consumers. I do think, though, that all companies are talking about their supply coming online, new expansions coming online. So I think that's going to start to see a correction in terms of supply-demand curve on the rec market. Despite the fact that we were a bit late in getting our approval from Health Canada in December of last year, it hasn't really hurt us in terms of our ability to sell, just given that there's still a huge demand for product out there. So we're very excited to be moving into the rec market in Newfoundland in February.
Okay, so in Newfoundland, is that the only place you're allowed to sell at the current time?
No, no. Newfoundland just happens to be first because we've already dealt with them on the clone sales side of things, so we have a good relationship there. We also are working with Ontario and British Columbia, where we have memos of understanding in place, and we're hoping to be launching additional product in there come, we'll say, mid to late March, once the second flower room comes online and our ability to have higher yields and higher harvest will come up.
And the clone sales, what does that look like? You're selling a clone to another licensed producer, or what's?
So yeah, we're able to sell to other licensed producers, but right now the clone sales we're doing through Newfoundland are to individuals that want to be able to take advantage of growing plants at home, so they can control the inputs to the product and how it behaves and what chemicals they may or may not want to put in there in terms of the growth of the cycle. So we've got some pretty unique packaging that we've sourced that allows the products to be shipped, stay warm, stay alive. You can ship up to 4 clones per package, same price as if you ship one. So I suggest people look at buying more than one if they're going to. And then you know, there's a lot of other companies out there. It's sort of this ancillary market around the cannabis space that allows people to buy light systems, watering systems, etc. for their homes. And that's, you know, we're trying to help facilitate that.
James just bought a whole bunch of stuff to grow stuff at home. So, but with the clones from EvenCo, what's the like, if I was a consumer, why would I want to grab one of your clones?
Certainly, I think, you know, right now, at least in Newfoundland, we're one of the only people offering clones for sale. And certainly, you know, there's certain strains that are offered that have expected THC ranges, CBD ranges. So I think it really depends on the end users, what they're looking for out of the plants. And we're trying to offer a variety to meet all users' needs in terms of what we would offer in terms of the range of THC, CBD content. So I think it's really up to the individual to decide what strains they want, and hopefully, you know, we're able to demonstrate a continued success in the plants we ship out and getting good feedback from the customers in terms of, you know, that they're alive, they're healthy, they're well, and they're performing well.
Yeah, that brings up a point, because I guess in order for you guys to make the decision to sell those in the first place, you must have understood that there's a market there for people that do want to grow their own plants. So
yeah, I mean, I haven't done a lot of research myself, but what I understand is that in places like Uruguay, where it's been legalized for some time, there's, you know, roughly 1 to 2% of the population that have started growing their plants on their own. You can kind of extract that a little bit to see how it would play out in Canada down the road. And I think there's also a small bit of novelty as well. Right now, people are allowed to do it, and they want to maybe try their green thumb and see how they can handle it. But I think it's certainly a good opportunity for consumers to look at, you know, ways of other ways of obtaining and consuming their cannabis.
How much do those cost?
Right now, we're selling the clones for about $20 each.
Okay.
Shipping flat fee anywhere in Newfoundland, we're doing for $35 right now.
Wow. Okay, that's cool. Landon, that's awesome. Thanks for coming in and giving us that update. And we'd like to have you come back once things are rolling out more in 2019.
That'd be fantastic.
Awesome. Thanks. Okay. Right now, we are going to explain to you what a bought deal is, assuming you don't know what a bought deal is, and maybe you do, maybe you don't. I don't know, but find out now.
Hey Steve, I didn't know you were here today.
Hey Sean, nice to see you.
Yeah, good to see you, actually, because I was going to ask you something. My daughter and her schoolmates are looking to go to the aquarium.
Sounds nice.
And they're selling chocolate bars. So I was wondering if you'd be willing to maybe, you know, chalk up a few for some choco.
Well, sounds like a good cause.
Yeah?
I could look at chocolate bar. What are they selling for?
$5 a pop.
How much money are they trying to raise?
Well, $1,000.
$1,000. So that's what, 200 bars? 200. Can I do my math? Yeah, 200 bars.
Yeah.
Well, tell you what, maybe we could do, I'd take $800 and I could buy them all for $4 a piece. How about that? Take them all off your hands.
Done deal.
Well, it's like a bought deal on Bay Street.
Oh, is it?
Yeah.
Why, what's a bought deal?
Well, bought deal is when a brokerage firm takes the whole issue from an issuer, buys all the stock or all the bonds in one shot, does it at an appropriately discounted price, builds their fees in, and then distributes it almost immediately or overnight to all their clients. It's a Canadian invention. The Americans haven't done it historically. They've been getting into it a little bit. But in fact, the Americans thought the Canadians were crazy. It came out of Bay Street in the late 1980s. Gordon Capital was one of the real innovators in that, and then the banks picked it up because the banks have all the muscle and they use their balance sheet. But the Americans could never figure out that the Canadian brokerage firms would actually buy the whole issue, and we're talking hundreds of millions of dollars.
Is there any risk in that?
Well, there is, I mean, but the risk is really a 1 to 2 day risk, and often the brokerage firms will have a good indication in their minds about where they might place the stock and what the price point is. But it's actually the least disruptive to the markets themselves.
Oh, really?
When you think of a traditional U.S. raise, which is still very much in place, a company announces that they want to raise maybe $500 million in the U.S., stock's publicly traded, and it's going to take 6 weeks to raise the money. They're going to do a 15 or 10 city roadshow across the United States, maybe into Europe. Well, that's very disruptive to markets. It takes a long time. The market knows there's new treasury stock coming, so the buyers back off, there's sellers, traders sell, and it can actually lead to a far greater decline in the share price than something that is done bang overnight. So the bought deals as a Canadian innovation, and Gordon Capital was able to, they were eventually bought by HSBC, but they were an innovative firm, and they could use their balance sheet and they would buy business. And of course people initially thought, well, that's kind of risky to buy all that. But they did it more and more, and then eventually it became fairly much the norm. Yeah. In fact...
so why aren't they doing it in the States?
Well, it is coming into the States now. I don't know to what degree, but it was just trends take a while to...
I mean, they're usually risk takers, or like to be known as risk takers.
But also, there are some differentials in terms of securities regulation. It's by no means restricted in the States, but what it requires is a what's called in Canada a POP issue, or a prospectus, to be written already in advance and constantly on file. It's kind of like getting your mortgage approved before you bid for a house. So having a prospectus on file with the Securities Commission means that you could go out as a publicly traded company, an issuer, and issue shares at any time because you've already done the pre-approval, meaning the paperwork in this case. Same thing as going to bid for a house and you know that you've got your financing lined up. So it's similar in that respect, and it keeps the door open whenever conditions are favorable. But it's really, it's the least disruptive to the stock. It also means there's a discount, so buyers like it because there is a discount involved. Yeah. In my example, for your chocolate bars, I propose a 20% discount, but...
I don't see why.
Well, I'm trying to make it easy for you. And then I'll
Sounds like you're trying to make it easier for yourself.
Oh my goodness. I don't, do I really need all those chocolate bars?
Well, that's the risk.
I suppose.
And the only place it's going to be disruptive is maybe in your belly.
There you go. That's true.
But hey, man, I really appreciate you picking those up.
Yeah.
And don't eat too many in the same day.
No, I won't.
All right, thanks,
I'll make sure they go to a good home.
Okay.
Joining us, as promised, is Ben Smith, Senior Letter for Midas Letter. Ben, how are you doing?
I'm doing well, Fraser. How are you doing?
I'm doing good. Let's jump right into it. We were talking a little bit about this off air, but there was a lot of action in Aphria yesterday. Lots of volume, the price increase, and then the U.S. markets were closed. So maybe you could just talk a little bit about that effect, because a lot of people were expecting Aphria to gap up and join the Canadian bull run today, but that didn't necessarily happen.
Yeah, well, it happened to a little bit of an extent. Sometimes with these arbitrage plays, when one exchange is closed and another one is open, you're not going to see the exact same rebound on one exchange when they both open the next day. There are different reasons for that. For example, the S&P and broad market cash futures open lower today, so there's going to be a little bit of a discount at the open from that. So you won't see a complete correlation to the exact gap up to the extent that one exchange gapped up the previous day, if that makes sense. So we saw that it gapped up, but then there was a pretty strong morning drop, and then there was a recovery, and that took prices in Apria to about the close of yesterday's close on the Canadian market, and now it's sort of drifting sideways. So yeah, it got a lot of those gap up returns, but not 100% of those.
Yeah, okay, that makes sense. And we might as well talk about the strength of Canopy. Canopy Growth is showing. They're having a little bit of a green day while the S&P is down about 1.5% and change. Just broadly, what do you think about what's going on with Canopy?
Well, to be honest, I'm a little bit surprised in the strength of Canopy Growth. There were a couple catalysts that helped propel the stock, and of course, it came from a very discounted situation, having dropped 40 or 45% from the October legalization, post-legalization highs. So obviously, a strong rebound was inevitable, and that's what has occurred. Now, perhaps some of the catalyst propelling that rebound. I'm mainly speaking about Piper Jaffray and coming out and recommending the stock a few days ago, and the New York hemp license, which added over $1 billion of market cap to the shares last week. Maybe some of that was a little bit of surprise, but I think that was just mainly pent up demand and those catalysts working in unison with that to help propel the stock perhaps higher than the catalyst itself would dictate in a normal market. And what you're seeing right now with Canopy is just an extension of that. There hasn't been a lower high form on the hourly chart yet, and that's sort of my benchmark indication that the trend may be changing. So it's still maintaining the integrity of the strength upwards, of the slope upwards. And until we get a lower high on the hourly, I think you can expect more drift up, even when broad market futures are down like today, and it's sort of bucking that. So, no technical damage yet on Canopy, and that's what people have to look for in terms of the reversal. Yeah,
no, that makes sense. And just to follow up on that, Ricky had sent us an article here that was talking about Canopy's $75+ million sales expected for this quarter. And that's something I think broadly, especially for the bigger players that investors are looking at, is revenues for 2019. So you got to expect numbers like that moving forward from the big players.
Yeah, and absolutely, and there's no doubt Canopy Growth is going to be first and foremost to experience a hockey stick growth. That is growth that sort of edges up while production capacity and while the pieces are being put in place. And then once legalization occurs and once all these pieces start generating revenue, then revenue just sort of explodes on a very large growth curve. So a lot of cannabis companies are going to experience that. Canopy Growth, of course, is going to experience that as well. They have pieces and assets all over the place that are just starting to yield return on capital. Now, in terms of the estimates that I saw today, there's two analyst estimates. I believe one is in the mid-60s, and the high estimate for the mid-February report is around 80 million. So to me, that seems a little aggressive, but it's coming. Whether they meet those two forecasts or not in the report upcoming, those revenues are going to ramp up, and that growth is going to be significant, and it's going to be lasting for a few quarters going forward. So a lot to be excited about if you're an investor.
Yeah, for sure. Even we were talking about Aphria. When their Health Canada approves their phase 4, they'll be looking at their 1 million square feet of product coming out of that one Leamington facility. By the end of the year, we should be talking about companies with revenues over 100 million, maybe 200 million a quarter. So now we're starting to rock and roll when those type of numbers start rolling in, right?
Yeah, absolutely. Aphria is another company at the forefront of that. Once they get that license and they're all free to go, they should have about 250,000 kilograms of production capacity going into the summer. And of course, Aphria has all those licenses, distribution agreements in place with Shoppers Drug Mart, with the provinces, almost all of them, except maybe one or two. And they have distribution channels all over the world. They have assets all over the world. So they're first and foremost on the growth curve as well. But even companies, even what we consider junior companies or lower tier companies like Wayland Group, with their distribution agreement last week, or the sale of international assets last week, they guaranteed themselves another 10,000 kilograms annualized in offtake into the European market, mainly Germany. So with their existing agreement, that tallies to about 13,000 kilograms annualized going into the EU market, which if they execute domestically should generate 9-figure revenue stream for them as well. So the hockey stick revenue curve isn't just coming for Canopy and the tier ones, it's also coming for juniors like Wayland and the mid tiers as well.
Absolutely, yeah. And as somebody who is inside all these facilities, for those that don't know, I shoot the site tours that we do. Wayland's entire factory that they're building right now is, according to EU GMP standards. So that's cool. So moving right along, we talked about this off air a little bit as well. In 2018, everyone was talking about consolidation and that there'd be buyouts and takeovers and that. There wasn't really as much as a lot of people expected, and that's now bleeding over into 2019. Do you expect that to kind of ramp up, at least in the first half of 2019?
Yeah, I do. What I've been seeing now is sort of two tiers of M&A going on right now. I think you have the first tier are sort of the tier threes, if you want to call it, the smaller companies that are in a block below the HEXOs and below the Can Trusts. For example, the GTech and I believe it was GTech and Gene, I believe, hooked up. And those are two smaller tier 3 names. And previous to that, Alethea and another company hooked up. It's eluding me right now, but
there's the ultimate point. Marijuana companies.
Yeah, there's exactly. So what I'm trying to get at is
that was Emblem, Alethea and Emblem.
Alethea and Emblem. Thank you, thank you, Fraser. Exactly. And I think ultimately we're going to see some of the maybe tier 3s kind of hook up to consolidate some of their strengths, production capacity, and what they have to offer, so that they can compete in the same sandbox as some of the mid tiers out there that are above them. And another form of consolidation you have, which we saw recently last week when Aurora took over in an all-share deal to purchase Whistler Medical Marijuana, is we have some of the tier 1 companies actually coming in and buying smaller companies. Tilray did it today with Natura Natural Holdings, which was a private company in an effort to boost production capacity, and they paid a very modest price for their future production capacity in Ontario. And of course, Whistler Medical Marijuana, which was more of a specialized company in organics with that GMP facility. So you're seeing tier 1s taking out strategic pieces and juniors, and that tells me that some of these smaller tier companies are in play, ones with differentiating characteristics, such as the way they grow, what they have to offer. Really market differentiators that, as they build out their brands, that some of the tier 1s are looking for.
Yeah, like a JWC is another one. They have a strong identity, a very unique way to grow. So they really have a chance to separate themselves from kind of the sea of ordinary. Like, as you were saying, you want to be either a large, low-cost producer or maybe even a smaller niche brand that really has a strong set of identities where maybe it's the way that you grow or something along those lines to really separate you from the pack.
Yeah, I think so. And Aphria's one of Aphria's No,
sorry.
No, I'm talking about Jacob Ripstein. I'm not sure what position he holds in Apria. I know obviously he's got he's a C-suite executive from Apria. He came out last month and said that you don't want to be in the mid-tier. You either want to be up high, you want to be a low-cost tier 1 producer, or you want to be a specialized producer with differentiating qualities. Being in the mid-tier is probably not the way to go, and I would agree with that. And recently, Jess McConnell came on Midas Letter and said, the exact same thing. He's the CEO of Rubicon Organics, and they have a premium product that they're trying to get licensed for, and they would be selling at the top end of the market with the higher margins involved with that. So I would definitely agree with that point, that you either want to be a low-cost producer with distribution agreements and a low cost of growing, low COGS or cost basis, or you want to be a specialized grower or producer where one of the tier 1s are going to look at your branding strategies and your branding differentiators, and then look to acquire you as a strategic piece in their portfolio.
That makes total sense. Let's wrap it up with one last thought, and we'll kind of dive into the whole U.S. market. What are you looking at down there, and what's of interest to you, and what do you see as catalysts for that market in general from an investor perspective?
Well, I think at this point, some of the names are getting a little bit overbought. Of course, Canopy has run over 60% over the past few days. Again, I'm not really seeing any signs of weakness yet, but the move is probably getting fairly mature, as it is with perhaps some of the mid caps in Canada, which have run an equivalent amount, and as well as some of the MSOs. They probably run to a lesser degree, but we're looking at 30-40% runs. In the case of Acreage Holdings, it recently ran 100% before the pullback. So I think investors have to be very selective out there and realize that FOMOing is not the way to go. There's no catalyst that I see right now that makes it imperative for investors to get in and to chase stocks. I think it's good advice to let things come to you, have a plan, and when they pull back to reasonable levels, to scale into it and make sure you don't get caught by the FOMO bug and destroy your cost basis and make it hard for you to hold when those inevitable bounces lower come.
Awesome. So as a writer, let me ask you, how would you spell FOMOing? You just invented a verb there.
Yeah, I think I'm coining my own terms. It's a pretty popular term out there, but I spell it with a capital F, capital O, M-O. And it deserves all caps because it's something no investor should do, especially in this market.
Awesome. Okay, Ben. Well, awesome as usual, and look forward to talking again soon. Thank you.
All right. Nice to see you, Fraser. Thank you.
How about some charts, huh?
Let's look at a few things here. Let's look at a few things.
Where shall we start, Sir Ed?
Let's start. We get a big down day today in the U.S., and it's the first down day. I'm going to put up the S&P 500.
The Standard & Poor's?
This is a Standard & Poor's 500, so the 500 companies represented here, and it's sort of the bellwether index. So here we have a 6-month chart, and clearly we saw here that we see the top of the market.
Yeah.
The top of the market is in here, broke, and we saw this. We had a test here, and then broke down, and here we are. And there's a line here that you could extend this thing out here. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green days in a row. You get into 11 or 12 days in a row, a lot of technicians will tell you you're due for a correction, a red day. Well, we got our red day today, serious red day.
So are you saying that's normal? Or?
Well, no. What I'm saying is the 11 days of green in a row aren't that normal.
Okay.
That's a monster rally, but it's a rally after that's followed an extreme oversold, one of the most oversold channels here. Look at that. That was pain. That was right up until Christmas. Lump of coal, lump of coal, lump of coal. And here we've broken that, and now we're up in here. I think what I'm going to do is put up I'll put up a shorter term chart here because what I want to show here, here's a 1 month. Okay.
Because when I see that red, it makes me want to run for the hills.
Well,
like
okay, but
shit my pants.
Okay. But first, look, in 1 month, there's here. Let me just put this up here. 1 month, we've got sort of like this. Okay, we got a channel here, right? I'd say we're still in that channel. Like we've had a correction, but there was a gap in here, I think, and I thought, geez, that's gapping. We're getting close to a correction, but I got to believe that we're probably going to see, this is just not going to end, but I think we're getting close to a downturn. Yeah, one red candle, no problem. But if we break that channel, that's when a lot of bells and whistles will get sounded. And that may start to bring in some more selling.
Okay. Just quickly, want to say hi to Justin Marshall. I see you in the chat there. And actually, hi to the rest of the people that watch quite often. Neil Fletcher. Who else we got there? Nikita Domi. But yeah, Justin, glad to see you there, man. We're all thinking about you, and we're all hoping for the best. So good to see you there, buddy.
I want to, Justin, be well, please. Yeah, so let's look at one of these mining companies that had a spectacular announcement yesterday that I saw. You know this company a bit, don't you?
Our Royal Nickel changing to. I should look this up because I don't know if it's still.
Let me get my glasses back on before I. Okay, so here
they
we
had
go.
like a 24% move yesterday.
Yeah. Now I read that they got 1,000 grams per ton, which is like 30 ounces a ton. 30 ounces. That's like a ton of rock worth $30,000.
Yeah, but these are the guys too that are pulling the gigantic nuggets of
yeah.
And I know, auctioning off millions.
You can. This is adding a lot of value to the company.
Yep.
So here's the 1 month. No, that's not it. Hold on a second. RNX. Where does that trade? Trades on X-CA.
But that's what I was saying to James. Is apparently the CEO left the Vancouver conference to fly back to Australia, and then that's when we had fun with the accents and couldn't quite pull it off.
Yeah. Okay. So here is, this thing is, and there was a time I heard that they were going to sell off these assets in Australia. They felt they weren't germane to what they were trying to do, and it turns out
germane.
Yeah, germane.
What does that mean?
It means relevant.
Okay.
Okay.
I like that.
Yeah. So look, this is when things started to happen. Then we had a real explosion here, which is a bit of a blow off top. And then, consolidation. And then you see a nice base being built in here. And then look at this action the last couple days. Up. Now, down day today. Now, I'll put up a 10-day chart just to make it a little easier here. So how do I interpret this? Spectacular news. Stocks moved from 40 cents to 80 cents, a double. Now, there's a lot of shares in this company.
Yeah.
So it's already got a pretty big value. I'm just going to put up the, just bear with me here. There's a 10-day chart. So, this looks interesting. This is, a big move from the 40-cent level. Looks like a little shoulder here, I hope. Yeah, okay, just a minute.
That's what you were saying before, though. Like, I'm listening to all the noise.
You're listening to noise, and you're listening to this. You got to try and all that information is being filtered into the day-to-day price action.
Yeah.
That's why if you listen to everything, there's pluses, there's minuses, there's this, there's that. I look at a chart and it sums it up for me.
So do you
Picture's
feel
worth
like
1,000 words.
So the gains that came yesterday, do you feel like they're healthy? They've established a new, you can't tell yet?
You know what? I'll tell you, going back to this action here. Okay, so that's a 1 month chart. As I pointed out, this is a nice base. So we're waiting for news, and it's holding, right? and then a pop here, and the news came out here, I believe, didn't it? The next day. So somebody got a little Woody. Anyway,
somebody got a little Randy
Woody.
Randy Johnson.
And then look at this pop, okay? And I'm going to look here. Volume today is over 30 million shares, I believe, and I suspect the volume yesterday was staggering. So that you got volume. This candle isn't that bad, but look, you needed a correction, so you got a pullback. You know, maybe you come back in here to the 60-cent level and watch and wait and see what the chart's telling you. You know, and look to see if it stops to drop.
Yeah.
Like that's not a very good candle, but the news, if the news keeps getting, it continues to be spectacular. Like I think I read 1,000 grams per ton over 2 meters.
Yeah. That's
like, you know, you take that gold right over to the Johnson, what do you call the guys that doesn't matter?
Johnson
Matthey, where they take their gold. Like they're refiners.
Okay.
Refiners. Hey.
Very refined.
And look, they're finding gold in sufficient. It's adding value to the company. Hey, what more do you want?
That's what gold will do when you pull it out of the ground.
Well, when you get that kind of grade, yeah.
We are also going to have a look at Valens GrowWorks and Freya's charts just in a bit, because first we're going to talk to Fire and Flower, who's a cannabis retailer, and they've surpassed $10 million in revenue, and I spoke to their CEO. Boom.
Nice milestone.
Yeah. Hey, we have a very exciting guest right now. We have the CEO of Fire and Flower, Inc., Trevor Fencott. Thanks for joining us.
Thank you for having me.
So your company is a cannabis retailer, and just looking at your latest press release, is you guys have done $10 million in sales since legalization. Is that correct?
That's right. So we were open right on October 17th, and we had 5 stores open at that point in Saskatchewan and Alberta, and we've increased it to 9. But yeah, so that's we reached that within 90 days of legalization. So we're quite proud of that.
Okay, great. We'll get back to that in a second. But first, just to let our viewers know, currently, as of right now, you guys are a private company.
Yes.
Plans to change that?
Absolutely. So we announced that, I think, in the fall that we are doing an RTO with Sinaport Acquisition Corp 2, which I believe has their AGM on the 30th, and then we will be trading shortly after that.
And the ticker symbol and the exchange? Will be
FAF, and it will be the Toronto Venture Exchange.
Awesome. We will definitely keep an eye out for FAF. Cool. So the whole retail space is a topic of curiosity for me. I've gone in these licensed producers' facilities and shot them top to bottom, and I get a sense for how the businesses work. But then once they're finished and the product goes into a container, it's sort of almost a mystery at that point. So what's that process like from your perspective? Just broadly first, and then I'll get at you with some.
So it depends on the province is the short answer. So for example, in Alberta, it would go from the licensed producer's warehouse, it would ship direct to the AGLC, the Alberta Liquor Gaming Commission there, into their warehouse, and then to us as a retailer. So we would order, each store in Alberta has to order from them directly and place an order for that store in particular. In Saskatchewan, though, for example, where we have 2 of our stores up and running, we also have a distribution center. So in Saskatchewan, we're allowed to be effectively the wholesaler. So we act as the AGLC or the AGCO in Ontario. So we buy directly from the licensed producer. So in that sense, we go out to visit all the LPs, and we look at their product. We do a rigorous evaluation on kind of their product quality and anticipated ability to supply us, because there is no margin for error. If we don't get supply in Saskatchewan, we will not have it. So there's no other appeal. And we have actually, by the way, never stocked out. So we have been very effective, I think, in getting product. And we also sell that product on, once we buy it from the licensed producer in Saskatchewan, we sell it on to the other independent retailers that are licensed in the province as well.
Okay, that's interesting. So in Saskatchewan, I guess, what was your perspective, like with the 10 million sales number? prior to that, before legalization occurred, did you have any expectations, or were you sort of in the dark and
Well, we had some information. Like we went, the MJ Biz fact book had certain sort of aggregated stats from the US, but they're not tremendously useful because they're selling products that we can't yet sell in Canada, so things like extracts or vapable products. But they did indicate that it was around sort of $1,200 US per square foot across all their domains, which is basically any regulated domain there. So for us, we use that for planning purposes, but what we've found is that that the demand has far exceeded supply, and our stores were built under the the premise of cannabis for all Canadians. So when people hear that stat that 22% of Canadians consume cannabis, everyone sort of assumes that they know who that 22% is, like, oh, I know that guy. But it's actually 22% across, and I think that number's low, across all of our demographics. Like people who consume cannabis are judges, are police officers, are surgeons. Like it's really a very democratic substance. So we found certainly first day lineups, when we analyzed those, kind of like a core sample, we found that we were about 50% male-female, which I think surprised some people. We were 50%, plus or minus old and young in terms of demographic, and sort of white collar, blue collar mix was pretty even. So it was a very, very democratic spread. So we've seen the demand be very, very high.
Yeah. Okay. Well, I was also curious, and I don't know how it changes from province to province, but your selection process in terms of what you want in the store, is it based on, who's producing the most, or do you just take everything, or how do you go through that selection?
That's a great question. So for us, we are a cannabis retailer, but we're primarily a retailer. So you have to run a proper retail business. So I would be the cannabis person at the head. But for example, everyone at the company has come from regulated retail like Liquor Stores North America, or Holt Renfrew, or Canadian Tire. So this is a very sophisticated buying process. Like, to be a retailer, the margins are not going to be excessively high, so you have to really manage that. So our head merchant, which is a position in a retail company, comes to us as a Walmart buyer, right? So this is a very sophisticated, okay, what do we think the market's going to be, right? And yeah, exactly. And so these conversations are the same thing, which is reliability of supply counts on a balanced scorecard. Price is obviously an important factor. Quality of product. What we found is that, and we're just in the learning stages of the industry, so we will figure this out as an industry. But what we found is the provincial buying bodies are just ramping up on their cannabis knowledge. So, for example, for us, once we buy it, we recategorize it inside the store. So, for example, knowing what we know about licensed production, it's very difficult to produce a plant, a whole flower, at 22% and above THC. That's just very difficult. It means that plant has not been stressed out at all. No, the lights haven't been turned on at the wrong time. You've visited a lot of these facilities yourself. Yeah. It's gone almost perfectly, and that to us is a premium product. Versus what we're seeing is a pass-through where licensed producers are kind of sort of saying, hey, provincial buyers, this is a premium product, but we know that milled product is not going to be a premium product, or pre-roll product is going to be largely a blend. So this we're having to kind of recategorize it for our consumers, because our job is to be effectively the Whole Foods of cannabis, which is really about curating a very confusing customer product category. Like health foods, I mean, you could endlessly read all day about what the keto diet and magnesium, like what do I need? So they do a good job of curating that for their health and wellness customers, and we need to do that in cannabis. So we need to take what's being offered on to purchase from the AGLC, or when we're in Ontario, the Ontario buying body, and they kind of recategorize it, saying, by the way, this is probably what a premium product actually is, and this is actually what a good, better, best. Here, we'll do our own work on explaining to our consumer how that breaks down.
How have you found branding? So from my point of view, I feel like our government has almost completely neutered the LPs. Yeah. But are you seeing branding effectiveness at all? Is it speaking to consumers? Are they asking for a certain brand? Is that working at all?
It's unfortunately, I think that is one of the things that we need to learn as a country. When we look at regulating how we talk about the product, obviously we want to protect children. We want to do it in a socially responsible way, and that's what Fire and Flower stands for. But you need to give consumers enough information to make an informed decision. And I feel like the way we've got it so far is over at one end of the spectrum. And what it's really doing is not allowing consumers to have an intelligent conversation about the product they're potentially purchasing, and it's certainly not allowing them to make proper distinctions between this and the black market. So in the absence of allowing licensed producers to talk about what might make their brand special or different, and there are differences between these brands, we instead find people coming in with a very low awareness of what an actual product would be from a licensed producer. They know licensed producer company names, but they don't really very low awareness. I think we tracked it at one point. It was sub 1% awareness of an actual brand on an exit interview. So to us, they're coming in and they're either using an alcohol analog, which we would argue is kind of an appropriate way to look at this. We're regulating it in a similar fashion. This is not a narcotic anymore in that sense. This is much more like alcohol. So let's let people have a dialogue about cannabis the same way they would about wine in a vintages section of a wine store. So we see people coming in saying, well, when I thank you very much for your education. This is really helpful, Fire and Flower. Very happy that you're engaging with me. I drink Heineken though when I drink beer. Is there anything for me there? Or, for example, I want OG Kush, like a strain name as opposed to a product name. And I think that's potentially going to be a problem, because if people keep identifying it with black market or strain names, which are not verified and possibly not even accurate, who knows what a indica sativa or what OG Kush really is. Right. If you can't let people talk about a product that's being validated at an LP level and under a Health Canada system, it's going to be very difficult to displace the black market.
Yeah. Well, I mean, if I were to come in, I'd probably ask for something high in CBD, but beyond that, I wouldn't have much more to say. So. Well,
that's right. And if you think about it, even just CBD, there's extracted CBD, there's whole flower. The whole plant was a CBD plant that's being extracted. There's many things that we should be able to talk about along with brand that are important to consumers.
Yeah, and I mean, later this year, and I don't know if you have any more knowledge than the average Joe in terms of what is going to be allowed. So vapes is a huge market. I was kind of shocked that they didn't allow that from the jump. But is that something that's a catalyst for the retailer? Is there higher margins there?
I think so. I think anytime you are dealing with a product that is processed in some way, that is not a basic ingredient like wheat or barley, right. I think you're going to get higher margins, and you're going to allow retail to capture some of that. I think that, candidly, I think that the decision to not include vapes in the first round of regulation, I think makes sense, because this is a different kind of product. And I think we have to be able to assure our customers that the same safety standards are being followed. And frankly, with another ingestion mode, whether it's glycol or medium chain triglyceride, like some science has to be done here. Certainly, I think to make our customers comfortable that, look, someone studied this. It's not just simply cannabis in another form. The processing has been studied. What's in it has been studied, and that it's going to be safe. Mm-hmm. So I'm actually, as a consumer as well as a parent, I'm actually happier that we are taking a little bit of time to figure this out before there's no rush. We should do it right rather than do it quickly. Okay, fair enough. And you're a Toronto guy, yep. So, and I got to ask you about the retail situation here with the lottery. Yes. How do you feel about that? I mean, you've got multiple businesses going. Yes. I'm sure a lot of research, the talent that you've acquired, the Walmart, all that stuff. Yeah. The individuals, over 60% were individuals, not incorporated businesses. Do you feel like they have a chance to succeed? And just in general, what do you think about the decisions that were made in this province? Well, I guess first I should say I grew up in Toronto. I actually reside in Oakville, which ironically is not lost to me that Oakville opted out of the cannabis. I would imagine that it's going to be interesting to see how that plays out, because I think that the ones that opt in are going to get the benefit of all the tax dollars that are pouring in there for training. But on the lottery, I think that it makes sense, and the way we look at it is it's like a beta test. And we've been in multiple markets now. We were here in Alberta. We started in Saskatchewan. Like we've really been kind of pioneers from the beginning in this part of the industry. And what we've seen is that the lottery, and this is not our first lottery. I think it's our third lottery. We had an Edmonton lottery. We had a Saskatchewan lottery. There's lots of lotteries. And what we've seen is it's a good way to start something on the fairness of opportunity part. But it's actually a very bad mechanism to ensure an outcome. So for example, in Saskatchewan, what we've seen is of the 51 licensed lottery winners, I think there's only 7 stores that are actually operating in the province. So it's very good to kind of allocate that opportunity, especially in a resource-constrained environment, which is why I think that what Ontario government did for the initial lottery makes a lot of sense, because we are in a supply-constrained environment. And it's better to get 25 stores up and running. If you don't have enough food, don't invite more people to your house for dinner, right? So that makes sense to me. But we view it as a beta test. And if that's the government's intention, then I think that that's the right way to do it. Whereas these 25, though, are going to need help. And we've obviously had discussions with many of the groups, just like our competitors. And in fact, probably everyone has had these kinds of discussions. People love lotteries. It's a very romantic notion of winning the lottery. But it's very difficult to set up a store, particularly in 9 weeks. And we would be challenged to do that. We actually obviously applied as well, and we picked our stores with the express purpose of, can we get this up and running, permitted, built out, an operational software system installed, point of sale system installed. There's a lot of moving pieces to a regulated retailer by April 1, and that's how we made our decision. So we look forward to the opportunity to helping lottery winners get to that point, first of all, on time, but also I think what the Ontario government needs to maybe look at from here is, how do you make sure that once they're up, let's assume you can get them up in time, that they're run in a compliant way. And that's really the challenge. So for example, it is non-trivial to be able to balance your inventory at the end of a month to a regulated cannabis standard. It's not like I lost 4 chocolate bars. Okay, well, I guess, oops, we won't do that again. It's like you lost 5 grams of something somewhere. You need to account for that. So, and then of course selling to minors. And I think that the perennial problem with operators that are sole proprietors is going to be the potential infiltration of the black market. It's very difficult to see that if you have groups, as we've seen sort of out west, that are maybe waiting for the supply issue to stabilize, and they're paying rent, and they've taken out the second mortgage, and this is their kind of this is their next career move. It's difficult to underestimate the temptation to maybe engage with the black market, and for us, that's simply not the case. We're well financed. We're long-term players, and I guess that's how we look at the Ontario market from a long-term view.
Right, that makes sense. Okay, so just very briefly, what are you excited for in the coming weeks and months?
Well, I think in the coming weeks and months, we're very excited about. I mean, we're starting to see the supply issue ease up, which is great, and I think that we're going to see a lot more growth in Alberta, which is why when I'm asked a question about Ontario, I think it's responsible to have the lottery as your beta test, but we have so much wood to chop in the West. Like, we're a Western-focused company because that's where the opportunity is at the moment. So for us in Alberta, we have 37 sort of license applications in. We have 7 of these stores licensed. We have 7 selling cannabis, but we've been building out. And this is a when supply comes online, not if it ever does. I mean, we all agree that as a country, we're going to have a 5 times oversupply of cannabis, depending on who you talk to, a year or 2 years, but it's going to happen. So we've been continuing to build. So what I'm very excited about is the possibility of stores that we have built out in Alberta coming online and becoming revenue generating assets. Obviously very, very excited about Ontario opening up and the possibility of working with some of these lottery winners to help, I think, establish a benchmark of compliant, socially responsible regulated cannabis sales. Okay, awesome, Trevor. Well, we'd love to have you back, especially when you're up and running in a public company and we can pour over the CDAR documents. And that'll be great. So thanks for joining us, and thank you for having me. Hope to have you back soon. Awesome, thanks. Joining me now in studio is one of our favorites, Charles Taerk, who's the CEO of Faircourt Asset Management and UIT Funds. Charles, how are you doing?
I'm great. Thanks for having me on.
No problem. So right away, let's talk about the performance in 2018, which for some, like myself, was pretty rocky and not very fun. But right. Let's talk about Faircourt and how you did.
So the fund that we manage in the cannabis sector is called the Ninepoint Alternative Health Fund, and we're the portfolio advisors. This is Canada's first actively managed mutual fund. It's coming up on our 2nd anniversary, so we're 2 years into this. And 2019 was groundbreaking for many factors. Obviously, legalization and many countries legalizing for medical purposes. Performance was rocky. We're very proud of our performance. For 2018, our annual number was about 17.5%. And what's interesting about that is when you compare our performance to the indexes or the passive strategy, so HMMJ was down close to 20% for the year. So we're up 17.5, HMMJ is down 20. So active management to us is really important. Being able to go to cash, being able to move positions, being able to trade, and being able to take profit. I think that was one of the big lessons of 2018. And just being able to be agile. I think that's really what we're able to do. I was saying just before we came on the air, there were 3 times during 2018 when the cannabis sector was up more than 25%, and there were also 3 periods when the cannabis sector was down more than 25%. So that's a lot of volatility for investors. You really have to, put on your seatbelt and feel comfortable with that level of risk. And I think that's what we provide as fund managers. We're lowering the volatility for investors as they make an investment in the cannabis sector.
Yeah, I mean, last year, I think a lot of people might have been like this too, but I was just waiting for things to, okay, it's going to pick up now, okay, and it just kept, there's these periods of just sort of like way more downside than I think anyone could have expected. So.
And then they abruptly changed direction.
Yeah.
And we often last year were talking to people about, well, when was the best time for them to invest? And we would say, look, as the market is weakening, that's the time when you should be investing. Not because it's selfish and you should get into our fund or an ETF, but what we've seen a number of times now, and even in December, that's the time when a strategic investor is going to make their major inroads. So back in August, the market was weak. That's when Constellation invested in Canopy. In December, you got the Altria deal with Kronos, okay. And it's when Tilray announced their big deals with Novartis and AB InBev. Those are strategic investment periods. So you don't want to wait too long and get too cute to call the bottom. You want to get in when you believe that there's relative value.
Yeah, and so getting in December would have been good because January has been a great month so far.
Yeah, it's been, the broader equity markets across North America have responded positively getting into the new year, and I think the psychology at the end of the year was pretty rough. So January's been a different month.
And you look at the broader markets as well.
Faircourt has many different mandates. We've got everything from a gold equities fund to North American equities, broadly diversified, and then this is a specialty product for us.
Okay, and in terms of announcements or pressers and things of that nature, what has sort of got your attention the most? What are you looking at?
Well, I just mentioned the strategic investments at the end of December. That was very noteworthy. And I think then shortly after that was hostile takeover being announced. This is unique because it's a U.S. company listed on CSE, but a U.S. company, Green Growth Brands, making a hostile takeover for Aphria. And I think we all know the story there with Aphria was doing quite well, but got in the crosshairs of a short seller report at the beginning of December. And it really hasn't recovered to its full strength. There's still some questions about the transactions that they've done internationally. And so it's an opportune time for someone to step in.
Mm-hmm. Yeah. Well, as we were saying too, some of the revenue numbers that are going to be popping up are just going to grow larger and larger and larger. So that's a transition maybe as well as looking at things like EBITDA and as opposed to just, funded capacity or other?
Oh, absolutely. You know, I think we saw this in November and December with the most recent quarters that came out. The companies in this sector are going to increasingly be analyzed by their bottom line results, by earnings, cash flow. And we saw in November, it was a great example because 5 or 6 companies came out in 1 week, all with disappointing quarterlies. And then CanTrust came out on the Thursday of that week, I believe, and they were the only ones that had a positive quarter. These were all quarters that ended prior to legalization, so it was mostly all medical. But the point was that investors are getting impatient with bottom line results. And actually we see some further weakness that people can anticipate for the first 3 to 6 months of this year, because we're playing, you know, delay with the quarters. But given that in Canada at least, you've got a delay in the number of stores that are being rolled out by the provinces, you've got production issues with ramp up that are slower than anticipated. So the earnings, both revenue, bottom line earnings, are not going to be as robust as previously planned. So you've got to make some adjustments to your portfolio and look for opportunities where you really believe in the company, you do your due diligence, you look at management, you see what the long term is, and you know, be prepared to be patient.
Yeah. Okay, great. Charles, if somebody wants to get involved in your fund, what do they do?
So this is a mutual fund. It's called the Ninepoint Alternative Health Fund. The fund code is, well, depending on whether you want A class or F class, the A class is NPP 5420. Okay. And then you can see the other codes from there. But that's what we're up to.
Okay, great. Well, thanks for coming in again, Charles. I hope you come back soon. It's been way too long since the last time you were in here.
Oh, my pleasure. I'd love to be on soon, too.
Great. Well, stick with us, because right now you're going to get an education.
Earth Ed. Wake up, Ed. Money. Money and power. It's all about money and power. It's all about, you know, I'm pretty sure a very small group of people control the whole thing. You know, I don't know if it's 1,000 people or if it's 2,000. You know, if you've got serious money, or if you're a politician that runs a country, why are people running countries so willing to go to war to protect their position? Because they're not going to war themselves. They're sending everybody else. Your son's going to war. That's one thing about if women were in politics, right? But would a woman send her son to war? I'm not so sure. A man, I think he doesn't give a shit. You know, there isn't the compassion with a man. Men are a little different, right? You can say whatever you want. We're all the same, but men and women are different. Earth Ed. Wake up, Ed.
How do I do the education face?
Just look confused. Well,
we're getting an education here,
confused folks. With ED at the end, right? Confused.
Confused and okay.
Okay, I got to sit tall here in the saddle, even though
we got to.
Oh, no, I'm really.
We wanted to look at a couple of tickers here, so we got to get to it, or we're going to miss our opportunity.
Okay, we got to look at Valens, right?
Valens and Afria we're going to look at.
Okay, let's look at Valens, and I got Valens up here right now. Okay. Now you see it, now you don't.
What's the time frame there?
Okay, this is we're going to change it, but that's a 6-month.
Yeah.
Now this is actually, you know, there's a few of these companies in this space that are really, really beating their counterparts in the space. For instance, we saw Kronos. That's in new high territory, I believe.
Yeah.
This one is pretty close. Mm-hmm. Look at this. And we had, there we go.
This is something Ben was talking about too. They're kind of a unique.
I don't know much about this company.
They extract. They've
right.
got the most amount of extraction going on. So they have deals with Canopy, and they just signed
another one. Look at this thing today. It's up to looks like it closed around 238. Is that right?
For 240.
Okay, so up a lot of volume. But look at this. It did a little test here, and that bottom held. that thing, and look at this. Away she goes. Now we're getting into you know, pretty rarefied air here. Big candle today. You know, I would have liked to bought it in here, like $1 lower.
Yeah, sure.
But this looks like there's something going on here that's not typical for the average marijuana stock in you know, today. Like, they're not all moving like this right now.
Yeah.
Would you say that's a fair statement?
That is definitely a fair statement.
Yeah.
But it's ripping right now.
It's ripping. Yeah, and you know what? Yeah, I gotta do some work on this. I'll do some work on it, and we'll talk about it tomorrow.
Okay.
All right?
So we're being asked in our group about Aphria, because yesterday it had a real strong move.
Let's take a look.
Yeah, talked about it with Ben a little bit. The U.S. markets were closed.
U.S. markets were closed, so you're going to get, you know, mainly Canadian influence.
Yesterday with the big move.
Yesterday.
And then today it kind of...
That was yesterday, and yesterday's gone.
And now it's...
Now it's today.
Oh.
And tomorrow, this will be yesterday.
I don't get it.
You know what? It's some people argue there is no such thing as time. We've sort of
yes,
just
that's right.
labeled
It's not linear.
No, look,
we experience it as linear, but it's not actually linear.
It's just, it's always now. You can't argue that it isn't always now.
I don't think I would try to argue that.
Yeah, you know, and yesterday was now then, and tomorrow will be now then.
Let's see how many viewers we lost with that little conversation.
Yeah, everybody's going for a drink. Okay. Let me just Aphria. Okay, just a minute here, just a cut.
I don't even want Ed to explain that. Well, Mary, it happened. APHA-CA. Here we go. I'm seeing this too. Afria's halted. So you know, if we weren't.
Is it halted?
If we weren't on TV, it would be easier to figure out why.
Okay, so look here we got a 6-month chart, and let's just look at this last area here. So I'm gonna cut her down to 3 months.
Ed, see that gap to the downside?
This one here.
Yeah.
Yeah. No, that gap. Usually gaps get filled, and I've said this now on the show.
Yeah.
So this gap here, this was.
That's during the short attack, obviously.
That was when they came out and they said, "Hey, there's some problems down there in Leamington."
Well, in Latin America, they didn't even mention Leamington, which has like an incredible amount of assets.
But so we then dropped precipitously, and I mean we're talking, you know, cut in half, more than half, from about 10.5 down to 4.5, right there.
That was brutal. Yeah.
Okay, and then an unbelievable rally here on this one day, moved up $2 from the low on this day here, and then, you know, backing and filling with a slight upward bias. Yes, you know, what does that look like to you? What am I drawing here? Anyway,
I don't know.
And then yesterday, look at this big day. This is the highest it's been since this calamity. Now
that's getting a little bit.
Yeah, I think we got
X-rated drawing there.
X-rated drawing. Let me just.
This shows for adults. Adults only here.
Yeah. We're gonna draw some more here. So now. There's a gap, and we got partially into the gap. So if that gap doesn't get filled at some point, or this thing starts to roll over, which I'm not suggesting, I'm sort of laying out scenarios. Yeah, look at it, it's come back. If you were short this thing and you didn't cover in here, you're saying, what was I thinking? You know, sometimes you get a major quick profit, so the shorters made a lot of money in here, right?
Yeah. And
then you don't cover, and now you think, what the hell was I thinking?
Yeah, yeah.
And that's the problem. So there's these two. There's the up force, there's the down force, and they're always at odds with each other. And certain times one side wins, but they don't win every day over and over and over again. You know, it's a battle, right?
It is a battle.
I think there's a book out there called The Battle for Investment Survival, which is. Sort of like one of the Bible books for investing.
Yeah, you guys on the our viewers here are talking about how some are saying it's salted. Reuters is saying Aphria is halted. You know, I feel kind of dumb. I didn't know that the...
okay, well, I'll tell you.
Did you know that I thought everything closed at 4, but the NYSE goes to 4:30?
No, well, they have an aftermarket, and I've got it on here, so yeah. I can.
Anyway, I'm
cheating here for.
It's not halted in the U.S., so
let's.
I don't know.
Well, but it's after 4 o'clock, so it shows not halted in the U.S. up 40 cents in the aftermarket.
13% in the U.S. What?
Yeah, well, that's because they're catching up, eh?
Yeah.
They missed the big move yesterday. So that means they're up today. We're down today.
Why did they wait? Why didn't they just do it at 9:30 a.m. like the?
Well, maybe the news wasn't ready.
Yeah, but we didn't have any news.
But maybe news is coming.
Well, it's always coming.
Well, maybe this is sufficient news. There's obviously news that they've halted this thing because you can actually trade on the offer after 4 o'clock. Did you know that?
Everybody or just special?
No. I think you got to have a broker. I don't think you can do it online. I think you got to do it as. I'm not sure the rules because it's not that liquid. Okay.
I don't like the whole after hours thing. They should just make it one way or the other.
Well, a lot of people go to after hours bars.
Yeah, but
they like
different.
that.
Everybody can go.
And then
not just the special broker people.
And then like your bar closes and you say, well, let's go to an after hours bar.
Yeah.
And
do you know when I was in Tel Aviv?
Funny stuff happening there.
Yeah, in Tel Aviv, there's no. I was there shooting for us. By the way, I didn't introduce myself, but I shoot all our site tours and the filmic stuff that we do. So we're working on a doc and so on. So I was in Tel Aviv, and they just keep going. You can go to different bars. There is no after hours. It's just the same. We
got a question here from Dave. Dave Combs. We have. Fraser Toms, and we got Dave Combs. Okay, yeah. So let's look up FSD here. I believe that's
huge.
I believe that's huge. Yeah,
yeah, so we got to do it quick because then we're going to wrap up.
Okay, we're going to wrap up, but
and we are not going to forget to tell people what is coming up tomorrow. So, on with it, Saya.
Okay, so huge, right? HUG.
Look at all these people bragging about how they can trade on after hours.
Oh yeah,
well, I can't. Okay, so.
Well, even if you could, would you?
No.
Okay, so here we go.
Just like I wouldn't short a stock. It's too. It's.
Why isn't that coming up? Okay, there it is. Okay, there's huge. Okay.
FSD.
Okay, so we got a 3-month chart. We got major support in here.
Wait, Carol F has asked 3 times in the chat. Explain what a gap is in a chart. But it really is just that. It's a gap.
It's when there's been a big change in price from the night before, and so the candle is not continual. So if it always opened and closed at the same price, and then traded, there wouldn't be any gaps.
Yeah.
But when there's a takeover or when there's some news, like we saw with the
Afria gap down,
Afria gap down. Okay. So there's a gap in the chart.
Anything interesting about FSD? Quick.
Well, yeah, like it looks like a nice support area here.
Yeah.
Here we go. Okay, so we got a nice base there, and it looks like we've had a rally, and that's a little toppy, that's a little toppy, but we're going sideways now. We're not really dropping anymore, which is a really positive thing for the bulls. And it looks like we're basing here. This basing area looks a little higher than here, which I think is constructive. Probably need to do a little more work. But if it starts to curl up here and get through, 44, 45, then we might see something like we saw with Valens or some of these others that are starting to show some really good relative strength.
Eruptions. Right?
Eruption. What's up next?
What's up next? What's up next? Doc? We are going to see Paul Ghezzi, CEO of Control Energy with a K, and Margot Miscalef, CEO of Gabriella's Kitchen. That's coming up tomorrow, starting at 3 p.m., just as we always do.
Paul, we've had on the show before.
Yes.
And we're going to have him on again. Yeah, he's a great guy, got a great business going, one of the faster growing companies.
What's not to like?
It's in the energy space.
Okay, we're going to get out of here. James is back tomorrow, so we hope you'll all join us again.
Talk.